Hello everyone, welcome to KCC channel. Hello everyone, welcome to KCC channel. I am CS Sandeep Bhatnagar. Today we are going to discuss about the budget expectations for 2021 for the salaried and the individual taxpayers. Budget is going to be declared on 1st of February 2021 by the Finance Minister Mrs. Nirmala Sitharaman. She has already raised hopes because she has said that this is going to be a dream budget. It's going to be a budget which has never been declared earlier. Therefore, the hopes are very high. So let us see what kind of expectations we as a salaried class or the individual taxpayers can have from this budget. First and foremost, let us see the Section 80C. Section 80C, as we all know that we get a reduction of 1,50,000 from the total taxable income. It has various parts of investments that we make and we claim as deductions. Now, this section, the limit under this section in 2003 was fixed as 1 lakh, and after a span of about 12 years, this limit was raised to in 2014 to rupees 1,50,000. And since then, this limit has stayed put. The inflation, as we all know, has been increasing rampantly. It has been hovering around 6 to 7% on a year-to-year basis. But if you see the average of this deduction, this has averaged about 3% annually. So it's high time that this deduction is raised from 1,50,000 to at least 2,50,000, if not 3 lakhs. Now, the second is the tax deduction on work from home. Since the pandemic, so many of the employees of organizations are working from home. They are incurring expenditure in the nature of Wi-Fi, broadband, then the equipments that they are using, computer systems that they are using, then the furniture they are using, and the electricity cost is also there. So it is expected from the government that some kind of deduction is given to the work from home employees so that they can at least rationalize the expenses that they have incurred on working from home. Third part is rationalization of the new tax rates. We know that last year in the budget, the finance minister had announced the new tax rates. In those tax rates, the rates of income tax were reduced, but the deductions that were allowed in the earlier tax rates were not there in the new tax rates. Like standard deduction, it was removed. The deduction for housing interest, that was also removed. Then the deduction for under various provisions of Section 80C, 80D, 80U, 80TTA, and all those deductions were totally reduced. They were removed rather. Now, there is so much of confusion amongst the taxpayers that which tax structure is beneficial for them. And moreover, because of the pandemic, the disposable income in the hands of the taxpayers has been reduced. Therefore, in order to boost the consumption, the government can consider introducing the deductions in the new tax rates and scrapping the old tax structure altogether, so that the maximum income is available in the hands of the taxpayers and they get the benefits of the savings, and they are also motivated to save money in order to protect their future wealth. Now, the next part we see is the interest deduction on self-occupied property. Now, in the self-occupied property, the interest is deductible to the extent of 2 lakh of rupees, whereas in the rental property you get deduction for as much of interest that you pay for the loan that you take from the financial institutions. However, there is a cap of 2 lakhs, so that if your interest deduction is more than 2 lakhs, you can carry it forward to the subsequent 2 years, subsequent 8 years, and get the deduction. It is very imperative that the real estate sector is to be augmented with growth, and for that government can consider, in fact, deleting the threshold limit for this interest that the self-occupied property on the self-occupied property, so that you get maximum deduction from your taxable income. Next is the principal repayment of the housing loan. On the housing loan, when you pay the principal along with the interest, the principal is deductible under Section 80C. As we all know that Section 80C is already so crowded, it has got so many aspects, like when you invest in LIC, you get a deduction under Section 80C. When you invest in PPF, you get deduction in 80C. You pay for your child's education, you get deduction 80C. So it's already a very crowded section. And when you club this with the payment of the housing loan principal, this Section 80C is almost exhausted. So you hardly get any benefit of the housing loan repayment if you have this in this section. It will be a good move by the government if this provision of housing loan repayment is taken out from Section 80C and a new section may be carved out, so that the housing loan repayment gets a full benefit when you pay the housing loan installments. Next is the increase in the taxpayer trust. We know that we have about 3 crore taxpayers who actually pay the taxes. Government can come out with various schemes in which they can award these taxpayers in one way or the other. We know that there is a system of awarding the certificates, appreciation certificates, bronze certificate, silver certificate, gold certificate, and platinum certificate. It's already there based upon the tax that you are paying to the government. This can be taken a step further by making these privileged taxpayers and giving them incentives in the shape of they can be given a priority when they go to the airports when you take boarding, or they can be given a priority in the railway reservation, they can be given priority in the passport issuance and renewal, and things like that can be devised so that they can benefit from the taxpayer schemes. If you have any kind of expectation from the budget, please comment below so that we can take it up further in the gamut of the finance minister. Thank you for watching this video. Please stay tuned for more of such videos. Goodbye for now.